What's up? Today is I don't even know what today is. Today's Thursday, and we have a few things on watch. ADIL is the most important to me. I was watching MTSL, but I'm not watching that anymore. Maybe just in the background. And here's TEFS trader disconnecting. That's nice. And yeah, ADIL is my main watch, and I do not have shares, and do not have shares in TradeNet either. My Trade Zero account is the funds are being processed right now, so probably next week it'll be ready for me to actually locate shares and have shares to short. So let me tell you what I'm watching on ADIL. I wrote at 9:18 a.m. before the market opened. See, this is why I'm not watching MTSL, by the way. I was watching it for a spike to short into, but it's not up enough. Here's ADIL, having a nice bounce in pre-market, hoping it can keep going after open to make a plan to short. No plan yet, but I am interested in this 4 area, so I'm going to write that down, but let me explain it first. So if you go out, this is the maximum time frame that, like, it's not going out further than this, and it's just a few months. So it doesn't have previous history other than, like, previous volume traded history other than these 2 days here. This day had about 6 million shares, and it topped at 430s. 6 million shares is not enough to want to short into. But then you get this day, and that topped at 5, and it had 18.3 million shares of volume. You see that it closed like around the high 3s, and it wasn't really able to get over 4 again. So if I do get a spike into this 380, 390 area, then I'll be interested in shorting into that 4 area. I don't know my risk yet. It's the ultimate risk is always going to be the wider one when I don't know my risk. So my risk is going to start out as 5. And once I get the rejection, once I get proof that it's going to fail, that's when I'll move my risk lower. So if it comes up to 390, that's a best case scenario to take a short starter, a small starter. And then if it breaks over 4, it gives you like a quick pop and then gets stuffed back under. That could be your sign of weakness. It depends how it's acting. And when you see the sign of weakness, that's when it's giving you a little more confidence to let you know where the resistance is starting to top. So let's say it tops at 425 and then goes back under 4, has a hard reject, and it starts to pop and can't get back over 4. My new risk is that 425 where it topped right before that. That's just how I manage my risk and how I move it down based on price action. So let's just see how ADIL plays out. See this fail out of the gate a little bit. I'm not interested at all to start shorting into here because when you start thinking about what your risk is, if you started shorting here without thinking what's your actual ultimate risk, you're going to be in a bad situation. I can almost guarantee it. So what I do is just think about it. Bring your mind to a level thinking, bring it to a level thinking, a level-headed, and try not to let your decisions affect what the stock actually has to do. Based on previous stocks that I've seen, I know that this stock has to spike in order for this to become a higher odds setup. If it doesn't spike, I'm not looking for the lower odds setup, so I'm not interested. And if you do that methodically with every single trade, it's going to prevent you from getting in at the wrong time. It's going to prevent you from making stupid decisions, entering at the lows, and risking pretty much disaster. So right now, ADIL, okay, it's fading out of the gate. It's not looking good. Who cares? You're waiting for the next play. I know it's easy to say when you don't have shares, but sometimes, like yesterday, MBRX, I was watching MBRX. We can review that for a second. Yesterday, since we saw this spike the day before, I was watching MBRX so it can like break this high and start ramping a little bit to the 2s, to the low 2s maybe, for a potential starter short. And you risk on that 2.5 area because Here with low volume, it doesn't really matter, but it did prove that that was a little resistance level here. But then if you go further back, you have this traded 33.3 million share, I mean 33.1 million shares of volume, and it topped at let's see where it topped, 334, okay? But what was the low? 250. So when you get that low, the 250 low, you know that there's 30 million shares of volume that were trading above that 250 low. All right? So now when you got that another chance kind of to get past that 250 where there's 30 million shares of volume above it, it couldn't get there. These people are scared. They sold into this, and it didn't even accumulate enough volume to make it really significant, but it did have a higher volume than like the average, and it did reject there. So that's just confirming to me that there's that resistance level. And then once you get this break of the daily chart, it's under this area. All these people now, this whole area is inclined to short into any spike into here. So if it does get excessive and start spiking into this 215, 220, 230, then the people who are here in this area, they're a little more happy and they're more inclined to sell now because it's less of a loss. And then when it starts getting towards this, those are the bag holders inclined to sell. So getting over 250 is very difficult for this stock in my opinion. And if it does, like if it fails at 250, then it's likely to fail hard. But that's why you cut losses at your risk, because you're risking these key levels on purpose for a specific reason. So if it does break 250 and you're still in, that 250 can turn into a huge loss that you never imagined. So always cut it at that risk. The risk you set before the trade, before your emotions were playing a role in your decisions, that's when you set your plan, and that's when you follow it for the rest of the trade. And the reason why I write it down is because of that. So I can follow my plans throughout the whole entire trade. So MBRX, I didn't touch it. I had shares, and I didn't touch it because it wasn't the perfect setup. So the more you do that, the more you have shares, and the more you sit there and don't trade because it's not setting up perfectly, the better odds you have to consistently make money. Hold on. Yeah, so ADIL did not do anything yet. I mean, yeah, it's going up and down, whatever. This could have been a potential short in this area, but I'm still waiting for the higher odds setup that I'm used to, that I'm comfortable with, and the one that I've been testing, watching, and yeah, that's what I'm waiting for. So the longer you make yourself, the better patient you be in situations like this, it will definitely improve your future trading for sure. So yeah, ADIL, let's see if it's gonna do anything. Oh, I have something I put together, a little bit of my my thoughts on leverage and scalping. So since nothing's really doing anything, I might as well go over it. So my thoughts on leverage and scalping. The reason why I'm highlighting this is because I got a few questions on this, and I do answer when you inbox me. I answer your questions, but I feel like when I'm writing, it's not explaining it as much as I could in a video. So my goal is to take little questions that I'm getting and then put them in like a few minutes of my video and focus on those to review it real quick. So in leverage, I feel like there's too much risk involved. If you think about it, this game already has the odds stacked against you by 90% of the time or more. 90% of traders lose. So that means that if you're a trader, you're 90% of the time likely to lose. That's my kind of translation of it. So technically, if you don't use leverage, it can increase your odds of success by as little as 1%. That itself is one step closer to consistency. Because the odds are stacked against you so highly in the beginning, every 1% that you can increase your odds of success, that 1% is going to make you less likely to be in those 90% of traders that lose. So 1% increase in your odds of success is a very big step, and it's not noticeable for many new traders because you basically have 90% more to improve. So when you do that 1%, you need to think about what is being improved in your trading all the time. With every trade, you need to think, is this better than the last trade? Did this increase my odds of success by how I attacked this sort of setup? If you made money, it doesn't necessarily mean you're increasing your odds of success, because if you're making money for the wrong reasons, you need to recognize that immediately. And let's say you trade Tesla, you make money. It's most likely a terrible lesson unless you tracked Tesla and tracked the setup that you're doing on Tesla. Then you would probably get like a 50-50 win rate if you did track it. So I don't understand why people, they hype it up and everything, and then they realize, like, hey, I'm not successful. And that's pretty much why. So keep that in mind, that 1%. You always need to try to improve your trading by 1%. Every single trade, every single thought you make, every plan you make is trying to improve by as little as 1%. So to move on to scalping and still implementing that 1% idea is, okay, so if you avoid scalping, maybe it'll increase your odds of success by 5%. Scalping is you get in a stock and you're aiming for 5-10 cents, sometimes even 1 or 2 cents. I've seen people scalping for. If you're going in there to aim for that, if you're aiming for 5 cents, you're going to make 2 cents. Best case scenario, I'd say. Once in a while, you'll make that 5 cents that you were aiming for. But if you're aiming for 80 cents a share, if you're aiming for $1.50 a share, and you're getting in for the right time to be able to aim for that amount of profit, then you're increasing your odds of success significantly, because you now are in, like, you're in the mindset where you need to wait for your specific setup to give you that profit opportunity. And when you have $1.50 a share of profit opportunity and you take 20-30 cents, or if you screw it up and you take 5 cents, that's not scalping. You're not aiming for that 5 cents. So if you're aiming for 5 cents, you need to cut that out of your trading immediately. So that's because it'll just screw up your mindset. You won't know how to trade correctly when you're using bigger money in the future. And like I said here, each small improvement in things that don't seem like they matter will get you that much closer to consistent success for the long run. If you only aim for the long run, you'll prevent short-term emotions from getting in the way of your path to success. Did you guys see how I was uninterested at all in trading ADIL during this area? Well, now it's perking, so I'm glad I didn't short here at 260s. Glad I didn't short when it was, in quotes, cracking the lows, as many people were thinking probably. Now I'm waiting. These people that were emotional here, this is them exiting. This is the covers of the shorts. Okay? And when it starts breaking, if it starts breaking this level, the high here where it was like 280s or 3, then it could start going. And then it could get to my area that I'm interested in. So if I was aiming for 5 cents, sure, I could have shorted here at 260 and said I'll cover before 250. But now I'm down like 3-4 times what I was aiming for. If you're aiming for $1 a share, you know that if you get in at 260, where's it going to go? You can't possibly be aiming for it to come down to 160s. So that's not a viable strategy. Right now, if it's at 3 and it goes to 390 or 4 or 415 or 430, now you're aiming for $1 a share. There's actually a possibility of getting that $1 a share. Me, I'm not a good timer. I'm probably going to take 30 cents if I'm aiming for $1 a share. 35 cents, 40 cents, that's completely fine. But I'm not aiming for 15 cents, 10 cents, because I'm looking for the big picture. I'm looking for the long run. I'm not looking what's my profit going to be today. I want what's my chances of success 10 years from now. And that's how you do it. So here we have ADIL spiking. Let's see how this does. I don't have shares, so it's a little upsetting, but you know, we can watch this and learn from the price action. If you were paying attention to the beginning of this video, you probably already learned some lessons from the patience that I was having here. If you found yourself entering on weakness every morning when you're trying to short, and you saw me do that, then that should like stick in your head, and you should use that for next time. Here we go. It's over 3. 3 is that whole dollar. So if it holds 3, it can go more. Let's see what's going on. Nothing yet. No shares. It's okay. So the main thing to do, every single trade, write the plan before you're touching it, before you're putting in your numbers in your order box, before you're punching in any of that. Write it down. Because if you miss the trade, you have it written down, you have your thesis, you have your learning lessons to look back at. If you enter right now, you just buy at $3, okay? For no reason. You don't have a plan. If you lose on this trade, you're not going to use it for a next lesson next time. You're probably going to sweep it under the rug. I mean, even if you upload it to Profitly, you're not going to use it for knowledge if you don't have notes on it. You can't, like, okay, look at your Profitly trade, be like, oh yeah, I bought ADIL at 3, and then, you know, I lost. And that's it. That's not your lesson. Your lesson is, what were you thinking? Are you going to remember what you were thinking 2 years from now? No, you're not. So you put your plan down. 2 years from now, you can look and remember the exact trade. You have the plan with timestamps. You can look. I even screenshot my charts and I put them in like a OneDrive folder. You can even look at those, and you like put it together. Put one and two together, and then you get your plan, and you get the stock, and you get how it played out. And that's just the main way to learn here. So you see that this is failing at 3. It looks like. But we've seen this a lot lately, and then it fakes out and continues running. But we've also seen the fake out, and then people expect it to continue running, and it starts rejecting. So we're just trying to see how this acts. If you're a new trader, I don't know if you noticed by my last videos, but you see that most of this game is patience. And the reason why I didn't make any other videos recently is I didn't make one yesterday because, I mean, I started recording and BRX did nothing, canceled the recording. And yeah, that's just basically it. Like you wait for the setups. Most of the time you're going to be waiting if you're doing it correctly, and by doing that you increase your odds and your chances of winning. So now so far it's rejecting 3. 3 could very well be the top, like that push over 3 here. It could very well be the top, but we don't know yet. We see this kind of a rejection. It's not really that hard. It's hard enough for, I guess, longs to be a little scared and to trap some shorts, but it's still holding higher lows. I'm not even inclined to short this. I'm not trying to buy this because these resistances here are going to play a role in it. So just because it's not a short doesn't mean it's a buy either. Alright, so I'm going to pause this. If this thing starts to ramp up or something, I'll continue to play. If not, I'm going to end up just posting, like, you know, another patience video. So as we could see here, we got ADIL, you know, it came down, it failed over this 3 area. So once it got over that whole dollar, once people started realizing that the whole dollar is not bringing it any momentum, any volume, and pushing it higher, that's when people start to get scared, and this sell-off could be a little bit because of that. But this sell-off doesn't necessarily mean it's over yet. We do have right here, let me zoom in a 2-minute candle volume, we have 800,000 shares here and 700,000 shares in these 2 candles right here. This one, we have 500,000 shares, and this one's 400,000 shares about. So in these 4 candles right here, literally 1, 2, 3, 4 candles, we have over 1 million shares of volume. So when the stock starts to get under these four candles here, those are the bag holders playing a role in this. Just because there's about over 1 million shares of volume in this area, it doesn't mean it doesn't mean that, like, these people are, it doesn't mean this is going to panic, you know. But once it gets under this level, it tells you that some of these people, they're not all bag holders in like 1 million shares of volume. They're not all buyers and they're not all sellers. It's probably half and half maybe. I mean, it doesn't really matter. The point is, there's volume here. There's people that are in from these levels that will be making decisions based on how it's acting now. So if this starts to have like 800,000 volume again, then you know it's probably not going to stop here and it could go higher. If it starts having 800,000 in one candle again, then you know that it could break this a little more easily. But when it's in this like 300,000 range, if it keeps staying around here and fading and bouncing a little more and fading, then these people are going to be more inclined to sell and they're going to be pounding into that, making it go down faster. So if you did notice that this is rejecting in the 3s at the time, you could start in short, small here, but you won't get your full size because it didn't give you the perfect entry. So you could get a small starter here in the front side, 1/6 maybe, and then when it starts coming down and it has that rejection and then it fails at 3, maybe in this 290s area is where you can add another 1/6 or 2/6, but I still don't think you'd ever have a potential to have your full position yet, because if you're adding it to this bounce too, it's like, where's it going to go? You know, you can add just a little bit. You can't really size in fully with that, the risk that I was talking about in these 4 and 5 area. But, I mean, if you've tested that, hey, now I can risk this high, then, all right, by all means, you could scale in full size in the 290s 3 area and risk 309. You're risking 10 cents. Okay, that's fine. You could do that, but that's not the setup I've tested, and it's not what I'm comfortable with. So I'm waiting for my setup. That's just the mindset you have to have on the market open, especially because you get these price swings, emotional traders, and you know, I used to be one of those emotional traders. I would chase the spikes, I would short the lows. It was a mess, you know, and that's why time is what teaches you these lessons. So yeah, I'm not really expecting much from ADIL. I mean, maybe it can fade more, but it's, you know, my play didn't set up. We're going into it's only 10 a.m. I was going to say 11 a.m. But we're going into like a sort of a lower volume time in the market right now. Like after 10 a.m., 11 a.m. And, you know, most likely nothing's really going to happen unless it grinds up and breaks the high or grinds lower slowly and then breaks the low. But you can always refer back to this and check it out. ADIL is coming back towards these lows right now in the 250 area. Let's see how this acts. I was going to cut the video, but this looks a little interesting. If you got that short into the 3 area, that'd be nice. By saying that, I'm not doing hindsight trading. I'm letting myself know that maybe for the next opportunity I should keep an eye on something that acts like this, and maybe then it could be a potential short. But like, I've seen a few of these set up exactly like this, but when it's just a few, you're not fully comfortable yet, and it's completely fine, because look, you're trading for your own personal benefit, okay? Why should you rush things? If you wait, you have the statistics for each setup that you're looking at, and it tells you basically how much money you can make if you methodically follow it and you don't let your emotions get in the way. You basically know exactly how much you can make based on the setup you've tested. And when you test them, you can put in your spreadsheet, like, make a sample, like you bought 100, you traded 100 shares on each sample you had, and how it played out at the end of the day, how it played out an hour later, how it played out 2 days later, how it played out by the end of the week. And you know, like, okay, should I short and hold for a week? Should I hold it forever? Most likely not. But maybe you find that if you hold for a week, you have the best odds to increase your gain. If you find that, take it. I never found that, and I'm not gonna lie to myself. I know that it's something I should avoid, and I'm not gonna trade those. But now again, I have this video on ADIL now. This video is for my own use. I can come back to YouTube, I can play this video, I can see what I saw in ADIL, I can even see the price action here in the level 2. That's the whole point of this. I see like some comments down there, you know, if you don't want to watch, it's not really for you. If you don't want to watch, if you want to watch, it's for you and me. If you don't, then it's just for me. But I even suggest for yourself to record your own trades. If you go on my private lead and you see my old videos, you see exactly what not to do. And I go back to those, I replay them, and I laugh at myself, like, what was I thinking? But, you know, you see the improvement video after video, and then, you know, with yourself, you can start writing down notes on your own videos, even on what you should focus on and what's been working for you. For example, right now, I'm looking at ADIL, okay? Maybe right now I'm thinking something differently because I want to trade this. So later on, when I rewatch this, I'm going to start seeing things that, you know, that I shouldn't be thinking while I'm trading. So next time when I watch this video, maybe I'll learn that, hey, like, it was actually very stupid for me not to short around 3. And if I see that, I use it for the next lesson, you know? That's basically this whole game, is improving slowly. Thank you for watching, guys. I hope you enjoyed ADIL. Nice little fade we got here. And trade safe, study hard. If you like this video, subscribe or like it if you want. And take care, everyone. Thank you.